Morning, Bill here with the Metals Minute. Today is Wednesday, January 26, 2022. We've seen the second week in a row with all four metals higher than the week before. So all the details are in the write-up, but it's been another good week for the metals. We may see a tamp down on the monetary metals, gold and silver, today being Wednesday. There's a few reasons for that. So we have some options that are expiring for gold, and the tendency is to try to force gold under this mark of right around 1850. So we might see it dip a little below that while people are hoping the options expire worthless. Some of the investment banks have a vested interest in pushing gold down, and today is the last day they can do that for this option period. So we may see that combined with the typical tamp down that occurs on Fed announcement days. Federal Reserve announcements, they're having meetings. There'll be various announcements throughout the day, and press conference supposed to occur this evening. So that's a typical time when they try to tamp down the metals, which is actually a bullish sign, because what it implies is that they believe the news they're going to share will be positive for the metals. So they try to get them to start rallying from the lowest point they can. That's a short-term phenomenon, and don't be discouraged by that. If you can, use it as a buying opportunity. Many people are doing that. There's a massive amount of buying momentum that has come into the markets. One of the largest, in fact, the largest gold-based ETF, which is a paper investment product that is supposed to be backed by gold. It has had the largest influx of cash in its history since 2004. So that just happened less than a week ago, just a few days ago. Massive amount of cash from Wall Street has come into the gold sector. That will help those of us that are holders of physical metal. But it indicates that even Wall Street itself is beginning to understand that gold and silver offer some of the few ways out of the situation we're in now from an investment standpoint. And so it was a massive purchase in one day. Over 52,000 pounds of gold notional backing was purchased. And so that has to filter its way through the supply channels, and we'll see the benefits of that in the weeks ahead. But what else is happening? Well, the interest rate story is on tap at the Federal Reserve, and the discussion among most analysts is on one extreme you have some that say, well, they won't raise rates now because of all the instability in the market. And on the other extreme, you have people saying that we could see between 6 to 7 rate increases sometime in 2022. And so in the middle there are the crowd that thinks it's going to be somewhere between 3 to 4 interest rate increases. And what I will tell you is it doesn't matter which of those stories is true. It doesn't make a large impact on the fact that currently interest rates in real terms continue to be negative. We have the official inflation rate pegged 7%. Recently, while interest rates are 1% and below. So even if they raise interest rates 8 times, which would equate to a 2% increase, they're still in negative territory. And when we look at actual inflation rate instead of the official inflation rate, they're negative to the tune of 12 to 14% in the minus category. So looking at it that way, a 2%, even if they raise them 8 times, a 2 to 2.5% change in the interest rates only makes a small dent in the negativity of the real rates. So it's kind of like the impact of whether we have 4 gnats landing on an aircraft carrier or 8. It doesn't make much difference either way. So there'll be a lot of talk coming out of the Fed, but there's not a lot they can do. And the only Fed officials that are talking about them raising interest rates high enough to get back into the positive territory for real rates have no position any longer at the Fed. They are a retired member or a past member. No one with any authority is talking about that. And that's the only way to make a material difference. And there's not a lot of appetite to do that right now because, 1, we have midterm elections, and 2, we have a debt level that is significantly higher than the last time we saw similar financial conditions in the mid-70s. So there's not that same ability to raise rates high enough to make an impact on inflation. Therefore, we believe it's a prudent and very important to protect our family's financial futures with the strength offered by precious metals. Thanks a lot. We'll talk to you again soon. God bless. Have a great day.